All right, today we're diving into something really cool. It's where modern finance, ethics, and small business growth all collide. And we're asking a pretty huge question. What if a financial philosophy that's been around for centuries, but supercharged with today's tech, is the answer for small businesses everywhere? Let's get into it.
You know, if you've ever started a business or even just dreamed of it, this question hits home. It's the classic story, right? You've got the brilliant idea, you've got the passion, but you need the cash to make it happen. And going to a bank, well, that can be a real headache. But just imagine for a second, what if you could get funding without drowning in interest payments? A system that's actually on your side, working with you. That's the big idea we're going to unpack today.
Okay, first things first, let's talk about a problem that pretty much everyone gets, the small and medium enterprise funding gap. You know, small and medium enterprises. These are the businesses that are the lifeblood of our economies. But so often, they just can't get the money they need from big banks. Why? Because they're seen as too small or too risky.
So what's the solution? Well, a really interesting answer is popping up in the world of fintech. And we're talking specifically about Islamic Fintech. It's not just a tweak to the old system. It's a completely different way of thinking, all built around partnership and real, actual growth.
So, you're probably wondering, how does this actually work? Well, one of the main ideas is something called murabaha. Now, this is not your typical loan. Let's make it simple. Say your business needs a new delivery van. Instead of just giving you cash, the financier actually buys the van. Then, they sell it to you at a price they both agreed on up front, and you pay it off over time. The big difference, the money is tied to a real thing, a productive asset.
And then, there's another concept called musharaka. This one is even more of a partnership. Think of it like a joint venture. Both the person providing the money and the business owner put skin in the game. They both chip in capital, and they share whatever happens next, the good and the bad, the profits, and yes, even the losses. It's the definition of shared risk, shared reward.
And this chart just lays it out perfectly. Look at the difference. Conventional debt, it's all about lending money and charging interest. The lender does everything they can to avoid risk, but with Islamic finance, it's about buying actual assets and sharing the risk. So the focus isn't just on your credit score anymore. It's about whether your business idea is actually a good, productive one. It's a huge shift in thinking.
When you look at it this way, you can see why this model is like a perfect fit for small businesses. I mean, you get ethical deals where the risk is shared, not just dumped on you. The financing is tied to real stuff your business needs, not just numbers on a screen. And the best part? Technology, fintech, is making it super easy to get in on this, especially for businesses in the huge and growing halal economy.
Okay, so this all sounds great in theory, right? But it's not just theory. Let's take a look at the actual companies, the pioneers who are doing this for real. And believe me, they're getting some amazing results. First up, we're heading to Malaysia to check out a peer-to-peer financing platform called MicroLeap. These guys are a textbook example of how to make this model work on a big scale.
And when I say big scale, I'm not kidding. Just look at this growth chart. They dispersed 125 million Malaysian ringgit in 2024. That's, wait for it, a 101% jump from the year before. It literally more than doubled. This isn't some tiny niche thing. This is a full-blown financial engine gaining serious speed.
And you can see just how committed they are to the principles. Sharia compliant just means it follows those ethical Islamic rules like no interest. Well, get this. Out of 208 financing deals they did in 2024, a whopping 207 of them were compliant. Only one wasn't. So yeah, this isn't just a marketing gimmick for them, it's the heart and soul of their business.
Now, I know what you might be thinking. Sharing risks sounds, well, risky. But check this out. Their default rate in 2024 was just 0.63%. That is an insanely low number. It's proof that their model for managing risk really, really works. And it says a lot about the quality of the businesses they're choosing to back.
So, to wrap up on MicroLeap, their whole model is peer-to-peer, helping with everyday stuff like invoice and contract financing. They've funded real-world SMEs, like a logistics company called The Lorry, helping them with cash flow. And they're not doing it alone. They've teamed up with the Halal Development Corporation, opening the door to over 14,000 businesses. That's real impact.
Okay, let's hop over to another huge market and see a different flavor of this idea. We're going to Indonesia to look at a platform called Alami.
So Alami runs a very similar P2P model, all Sharia compliant. In 2023, they channeled about $1.6 million to more than 200 small businesses. So what's their secret sauce? It's a really smart credit model.
They don't just look at spreadsheets. They blend that with qualitative stuff like actually visiting the business. And the payoff? A non-performing loan rate that's basically zero. Incredible.
For our last case study, we're heading to the UAE, which is a massive hub for Islamic finance. And here, we're going to see two different players taking two really interesting approaches, Beehive and Maward Finance. And this is where you really see how diverse this whole space is. You've got Beehive, a scrappy, regulated fintech startup using that commodity Muraba model we talked about earlier. And then you have Maward Finance, a big, traditional player that's innovating with its own digital version called eMurabaha. It just goes to show you, this model isn't just for startups. It works for the big guys too. All right, so we've seen some amazing examples. What are the big lessons here? And let's be real, what are the hurdles they're still facing?
The main takeaways are pretty clear. First, this is not a one-size-fits-all solution. Different businesses need different kinds of deals. Second, when you mix slick digital tech with supportive government regulation, you get a recipe for explosive growth. And third, having strong governance, like special Sharia boards and regular audits, is absolutely crucial. It's what builds the trust that makes the whole system go round.
But, hey, let's not pretend it's all easy. There are definitely challenges. The industry has to figure out how to grow beyond places like Malaysia and Indonesia. Managing risk with really early-stage businesses is always going to be tough. There's also some complexity around standardizing the Sharia rules, and maybe the biggest hurdle of all, just getting the word out. A lot of small business owners have no idea this is even an option for them.
So with all that in mind, what happens next? Where is this all headed? Well, it looks like there are some pretty clear next steps. If you're an SME owner, you should seriously start looking at these platforms as a way to get working capital. If you're an investor, this is a whole new asset class to consider, one that ties your money to real ethical impact. And if you're a policymaker, the job is to create the right environment, the regulatory sandboxes and support to help this sector boom.
And that really brings us to a big final thought. Islamic Fintech is showing us that money can be both effective and ethical. It's already shaking up how small businesses get funded. So the real question we're left with is, what's next? If it can work here, what other industries are just waiting to be transformed?